Sara Eisen of CNBC, my friend and former colleague from Bloomberg and CNBC days. How are you?
It's good to be here. Thank you.
There's so much to talk about. Obviously, a lot of politics that we talk about on this podcast, but you live and breathe the business world and how they're consuming, reacting, what their expectations are when it comes to all things Trump. We taped this 2 weeks after the election. There was a surge on Wall Street afterwards. Some of those gains have been erased. I know it's hard to paint all of Wall Street and business with one brush, but what is the general sentiment right now about what they've seen so far and what their expectations are?
The general sentiment from investors and business leaders, we talked to a lot of CEOs as well, I have to say is very bullish. And while that initial surge has faded a little bit, I think you have to keep in perspective what the context is, which this was already a very strong stock market going into the election. There were some jitters ahead of the election about whether we would have a certain result, whether it would take days. Remember, we were all wondering how long we were going to have to wait to get a result, whether it was going to be contested, whether it would be a peaceful transition of power. That weighed on the markets. You saw that in places like gold, which investors typically buy when there are big questions and uncertainties and there's fear. That ran up into the election. So we had a strong market. There was some questions about the election. We got the election. I think just the certainty factor that it came in so decisively was one piece of uncertainty that got lifted and why people were excited. And the second one, that President-elect Trump now won also with a pretty resounding statement and also was able to get Congress, was seen as the most bullish outcome generally by the markets and investors. Why? Because he campaigned for lower corporate taxes. He campaigned for deregulation. And even though tariffs aren't necessarily the most market friendly, I think the overwhelming view is the combination of those policies ultimately would be pro-growth, a pro-growth agenda. And that's good for the markets. And that's why we saw this sort of euphoria out of the election. And if anything, what's held it back lately is you've seen rising bond yields, which typically happens when economies do well and when outlooks brighten. But that also can get in the way.
Translate that to for the average person. When you say rising bond yields, what does that mean?
So treasuries, our bonds, they get bought for several reasons. One reason is when people are worried, kind of like I mentioned gold, they're a safe haven. When treasuries get bought, the price of their yield, what they pay to investors, goes down. When they get sold, the price of the yield, how much we pay to borrow our U.S. government, goes up. What makes treasury yields go up and treasuries a sell? Well, better economic growth, higher inflation, and higher debt ultimately in the long term. And those are things that the market's thinking about right now and why they've been selling treasuries. So in a way, it's happening for a good reason. It's because the outlook for the economy is brightening. So those higher treasury yields, ultimately you'll feel it. Higher mortgage rates, higher auto loans, everything. The cost of borrowing will go up. But it's happening for a good reason because the economy is doing so well.
Though, how does that then translate to the average consumer that's been concerned about cost of living here, and inflation over the last couple of years?
Inflation's a little bit of a wild card right now. So the good news is those high inflation rates we experienced coming out of COVID, it got as high as more than 9%, have come back down to earth, more normal-ish levels of inflation, 2 to 3% levels of inflation. But it still doesn't feel like that. And I think that was a clear message from the election as well. And that's because Americans are paying a lot more for basic goods that they're getting at the groceries that they did before COVID. Just because the rate of inflation has come down doesn't mean the cumulative impact of all of those price increases over the last few years isn't weighing on Americans. So we're still feeling it. We're still experiencing a rise in prices. And one of the reason I say it's a wild card is because if the economic situation improves under, say, President Trump and some of his policies, that demand, we buy more, we have jobs, can create inflation. So we could see another flare up of inflation, which is one of the market's sort of worries in the back of the market's minds amid all this excitement about growth. The other thing is tariffs. Ultimately, if they are done in a sort of blanket way across consumer goods, could be inflationary because it means that we charge more to import items into the US. And that higher import price gets passed on to the consumer.
Right. Trump has been talking a lot about tariffs. I watched that interview he did with the Chicago Economic Club, the Bloomberg editor, a couple months ago, where he's like, 500%, 1,000%. And he talks about using them as a negotiating tactic to try to, increase industry here, manufacturing here, move jobs back here. But that's, there's a lot of question marks around that. I saw Jamie Dimon this week saying, ultimately for Donald Trump, he cares about the stock market. And that's why our general feeling is he's not going to go crazy with tariffs.
Yeah, it's art of the deal stuff. I mean, a lot of the big Wall Street investors that we've been talking to and CEOs like Jamie Dimon see it as a negotiating tool. And we saw him use tariffs that way. In other words, we will threaten to charge you for bringing your goods into the U.S. to sell to American consumers. Give us better terms. Give us better, fairer trading terms. This has been one of the most consistent messages out of Donald Trump on the campaign trail in his last presidency. And that is, and there's some merit here that, buying a Chevy in Europe costs a lot of money because Europe has tariffs, because it is more expensive for Chevy to sell into Europe. So then why shouldn't European automakers have more trouble and have more costs when it comes to selling their cars into the US market? It's about leveling that playing field. So the threat of tariffs, according to investors, is really what President-elect Trump is after here, especially on China when it comes to getting better trading terms and better trading deals. But ultimately, I think the market thinks we're going to get more tariffs, just maybe not as much as have been threatened.
Yeah, and staying with the auto example that you brought up, even cars that are manufactured here, a number of their parts come from abroad, including China. And I think that's what some people are starting to take in at this point, which is when we talk about tariffs, it's not clear cut, and ultimately the price is often paid by the American consumer because those tariffs, those increases are eventually passed along to us.
Exactly. I'll give you a good example of that. So Nike sneakers are mostly made abroad. Now, China, Vietnam, Bangladesh, they've diversified a little bit, but there's still factories in China. Or Apple, look at iPhones. Most of Apple products are made in China. So if there's a tariff now that increases on China, Apple and Nike then have to pay more to bring their goods into America to sell them to US consumers. How do they do that? They make sneakers and Apple iPhones more expensive. Now, I'm not sure that the president-elect necessarily wants to do that. It might be more strategic and targeted by industries, like, for instance, autos, where we compete more. Because ultimately, I'm not sure that they want to raise prices on the U.S. consumer, especially when he ran on bringing inflation down. But that's how tariffs work, ultimately. And that's why the worry is that consumers pay it. But, to Jamie Dimon's point, he doesn't want the market to go down, doesn't want consumers to pay more. So it may just be negotiating, or it just might be more targeted in terms of where those tariffs go.
And when it comes to tariffs, we've been talking about recalibrating the relationship with China here. And it's become more difficult to do business with China for a variety of reasons, going back to Trump's first term with the tariffs, then obviously COVID and what happened with the supply chain. Where is the West right now in American business on China? And how difficult is it? I mean, are there real alternatives like Vietnam and India, or ultimately is there nothing that can really replicate China? And why is that?
There are alternatives. And certainly we've seen American manufacturers of everything from semiconductors to home furnishings to toys try to diversify away from China into places like Vietnam. India is increasingly seen as a very competitive place. But that takes time and it takes know-how. It doesn't happen overnight. And when it comes to the amount of labor that China has focused on manufacturing and specifically advanced manufacturing and what they built up, that capability over the years, it's really hard to just snatch it all away for these companies because some of these other places are less developed when it comes to their workforce and their infrastructure and their manufacturing capability. So it is happening. It's just not happening quickly. So to your overall question, I think it would be very hard to, when you hear politicians or pundits talk about decoupling, you can't decouple. We're past that point when it comes to China. The U.S.
We're married.
We're married.
Actually, Ian Bremmer likes to refer to it as the U.S. and China are a divorced couple dealing with joint custody over the world.
And over American business, as it's true, and global business. There's a lot there that would have to be untangled, that would be very hard to untangle. And that's why when you talk to some of these big name investors, Ken Griffin of Citadel, one of the most successful hedge fund managers, their biggest fear is some sort of confrontation between the US and China over Taiwan, which I think is one of the risks out there for the market. And it's impossible to price and to game out and figure out because of just how interconnected the supply chains and also demand. I mean, look at companies like Disney and Starbucks and Nike. They have huge markets where they sell to Chinese consumers. And for the last 20 years, for American companies, China has been the prize. That's been the market that they were chasing because it's so big and rising middle class. I mean, that's where you wanted to be. So it would be really hard. And there's a close economic relationship there, even though there's obviously geopolitical friction. And that's going to be a challenge for the incoming Trump administration.
Someone who has a good relationship with China, at least it appears so, is Elon Musk. He's very close to Donald Trump. Mm-hmm. What has everyone made of just the Elon relationship with Trump? And is that seen as a positive that someone, with so much business acumen, running several companies now, has the ear of the president-elect?
I think it depends who you talk to, but in the business world, in my world, if you talk to investors and CEOs, it is seen as a positive. Why? Because Elon Musk has successfully run, first of all, Tesla, created many companies, SpaceX. He bought X. And by the way, when it comes to this DOGE, Department of Government Efficiency, a lot of people look at what he did at X, formerly known as Twitter, when he bought it, which is he slashed costs and he slashed people. And there was so much criticism that they were going to die and that the company wouldn't be able to thrive and they weren't going to have the technology and the advertisers would all leave.
I actually just got a copy of a book I haven't read yet by a couple New York Times reporters called How Elon Musk Destroyed Twitter.
Right.
Obviously with a certain premise there.
Right. We've interviewed those authors, and the truth is we don't know exactly how that X is doing financially or whether the advertisers have all come back. But we do know culturally that X is still alive and well and doing just fine and is the place where a lot of discussion goes on and a lot of news happens and a lot of news is made, which is what he ultimately wanted. The bottom line is, from the business community, having someone like Musk, who is the most successful and one of the most brilliant business leaders of our time, advising a president-elect on really hard tasks like managing government efficiency or even relationships with other superpowers like China, where Musk has experience and has, even though he has a stake in it, I think is ultimately a good thing. And you want that. The question becomes where the conflicts of interest lie and just how close he stays. Is this just something during the transition period? Because, for instance, his company's SpaceX is a government contractor. Tesla obviously has a lot of skin in the game when it comes to regulations around self-driving cars. It also has skin in the game when it comes to the U.S.-China relationship because they sell a lot of Teslas there and they have a factory. So these are things that I think will add to scrutiny from the mainstream. But in the business world, I think it's considered a home run. And by the way, just look at Tesla stock. The longer they hang out together, the more it goes up. And it's a widely owned stock by retail investors.
Yeah. And by the way, his net worth has gone up. I think it's surpassed 300 billion at this point.
It has.
I think the question we're all asking is how long does that relationship last? Because of the history there with Trump and several of the folks who've worked for him in the past or worked closely with him.
They are both strong personalities, but so far it seems very chummy. I happened to be at the UFC fight over the weekend, and
you were there, yeah. They were in the front row together, yeah.
And they were in the front row, and Trump had an entire entourage, several rows back, of people around him. RFK Jr. was there, Tulsi Gabbard was there, Mike Johnson, the speaker, was there. I mean, two of his sons were there, but Elon was right by his side the entire night. So for all of those wondering if he's overstaying his welcome or anything, if there's any friction, I don't see it. Not to mention that Trump attended the SpaceX launch this week.
Right. They watched the largest rocket ever launch, and so I wanted to discuss that because there's a number of the priorities for the Trump administration are certainly impacting stocks and various trades, if you will. There's the space trade based on Elon's proximity. One other person who's having an impact, I know this is something you've covered, is RFK Jr. If he's able to get in as HHS secretary, given his priorities, especially on food, as well as pharma.
Right. We have seen a big reaction in stocks. So pharma stocks, especially the vaccine makers, Pfizer, Moderna, they have sold off since the election and since the nomination of RFK Jr. to lead HHS. We know he is a vaccine skeptic. We don't know what that will look like as far as regulation. So that is a fear in the pharmaceutical industry. The other place I've been paying close attention to is the packaged food stocks. So think PepsiCo, which makes Frito-Lay, or Campbell's Soup, which makes all sorts of snacks, General Mills and Kellogg, which makes the cereals and yogurts. They've all sold off and underperformed because RFK Jr., if he does get in as HHS secretary, will have oversight over the FDA. And what the FDA regulates are ingredients and healthy claims and labels. And those are specific things that RFK Jr. on his campaign has gone after. Dyes. Remember the Fruit Loops he used to pull up and then criticize the number of ingredients in U.S.
Right, the colors, red dyes, etc., versus the ingredients in
red
Canadian
4,
Fruit
yellow
Loops.
2, all of those. So there are different regulations in Canada and Europe around dyes where they either have to limit them or not include them or label them properly. So some of these companies that do a lot of business abroad, Mondelez is one, it's a snack maker behind Oreos cookies, and Pepsi is another, Frito-Lay. They'll be okay because they are used to working with different ingredients if we have rule changes like that. It's the companies that are more domestically focused, like Monster Energy, which has most of its business in the U.S., for instance, Keurig Dr. Pepper, a lot of the business in the U.S., could raise their costs if they have to source different ingredients. That's just one example of a rule. The other one people are looking at is he's called for the food stamps program to not allow purchases of ultra-processed food. This one might be trickier because it's actually the USDA, the Department of Agriculture, that regulates what food goes into food stamps program. But if he does have authority and figures out how to define processed food, which is a whole nother challenge, then that also could have some ramifications for some of these companies that make all of our processed food, frozen pizzas, snacks, muffins in packages. All of that is ultra processed food. It's hard to figure out what the alternative would be, honestly, in any cost effective way, but it's something investors got nervous about.
And it's super interesting because it seems like there's a lot of conflict here. There's the tariffs. I love tariffs. It's the best word in the dictionary ever, right? Better than love, that Trump says, but it could have an inflationary impact. Same thing with RFK and some of the priorities that he's having, make America healthy again, but at what cost? And so it'll be, I imagine one of the things you're going to be watching here is how they try to make that all work out.
That's one. At what cost? And also, President-elect Trump ran on a deregulation agenda. So the last thing they want to do is impose all sorts of new regulations when they're trying to deregulate. But the regulation piece is really important and one that people don't talk about that much. But over the last 4 years, during the Biden administration, the regulator agencies and the FTC, which regulates whether deals can go through, antitrust, gets a lot of attention. But there are a lot more regulatory agencies. The FCC regulates telecom, for instance. There's the EPA, which we know, of course. There's the FDIC, which regulates small banks, OCC, CFPB. I mean, the alphabet soup is endless. And talking to CEOs, I'm now realizing just how overzealous these regulatory agencies have been and how difficult they've made lives for various industries over the last 4 years. So putting Republican, more deregulation folks in charge of these agencies is actually quite powerful as far as a potential economic stimulus. And I think that's what the market's responding to and why they see it as a net positive versus maybe some of the tariff policies, which could subtract from growth.
And it comes to the Supreme Court, ruled against the Chevron precedent. So there's a lot of ramifications down the pike here when it comes to just how much power regulatory agencies are going to have in the future, even notwithstanding the fact that Trump was elected and who he puts in there. Sara, one thing that people have been watching and have been trying to figure out where this market's going to go is housing. And obviously that speaks to the cost of living thing, the price of housing, et cetera. What is your sense as you watch these larger macro trend lines of what it means for real estate and what are folks in that world telling you right now?
The tricky part of the housing problem right now, and Americans feel this every day in terms of rising home prices and costs, is that we have low supply. We just don't have enough housing built. And because of that, prices have stayed really elevated and very high. So it becomes less affordable to go out and buy a home. If you couple that with the high mortgage rates we've all been feeling over the last few years, housing affordability is tough. And so a lot of people have stayed and have not moved. And a lot of people can't afford that first time home. And so that's why housing, along with groceries, continually through the election, pulled as the very top concerns among Americans. What we hear from some of the big home builders in the US, yes, deregulation will help, but it's more at the state level that they need help when it comes to deregulating to get housing built in this country. But deregulation, no question, will help. It just takes time. It's going to take time for builders to catch up and to get incentivized to build more housing so that we can ultimately bring prices down. That's been a huge challenge for the Federal Reserve that's tried to bring down inflation. Housing has been very stubborn and sticky when it comes to those prices. And demand has just not been there because of the high mortgage rates and the high prices. So activity has been fairly weak.
And the boomers and everyone sitting on their houses that they got on 2 or 3% 30-year mortgages.
That's the thing. We people locked in at what, 2%, 3%. So even though we've come down a little bit with the Fed cutting rates, we're still in the sixes, and it's actually gone up since the election because of what I said, the higher rates and the more improved economic outlook. So it's not like all things go for housing compared to some of the other industries. Interestingly, though, the home builders have been some of the best performing stocks. Why? Because prices have stayed high and there's there's not enough supply. So when there's not enough supply and prices are high, the demand is still there. People are still having babies and having to move for work and all of those things. And so they do really well.
One other big policy that Trump has prioritized, and I'm curious about the business reaction, is deportations, dealing with undocumented migrants. There's a lot of talk about just the share of workers in various industries. I was seeing this chart here from Axios. Nearly 14% of construction workers are undocumented, 12% of agriculture, 7% of hospitality, and so on and so forth. How closely are people watching that? And have they gotten a sense yet of what sort of economic impact immigration policies could have?
We don't have a sense of what kind of economic impact this immigration policy could have. I think it's another one of those question marks because people don't know exactly what the deportation will look like, how massive it will be, and how far reaching. But to your point, there's no question that there's been a huge influx of immigrants into this country, and they have helped propel this jobs market. We've been wondering over the last 12 months why the jobs numbers are so strong when the economy looked like it was weakening from higher interest rates. And one of the reasons why is because of immigration, and they were able to fill jobs in these sectors. Coming out of COVID, companies had trouble finding workers. They're able to find more workers. So it has helped our job market. We don't know the impact of people being deported. It's just one of those wild cards. The market's not that worried about it. And in part, it's because we've had an overall very strong jobs market and labor market. There's been demand for workers. There have been very few firings. It's all been a really good news story. I'm not sure necessarily that the market, investors, CEOs at this point see this as majorly harmful for the overall economy and the job market, but we don't know. We don't know the size and scale of it, so it's a little early to speculate on that.
And we'll end here away from politics. Swiftonomics was a segment on your show recently.
Always.
You talked to Rob Sheffield. How many concerts did you go to on the Eras tour?
I've been to 2. I went in London and in Miami.
So you contribute to the billion-dollar industry that is Taylor Swift. The tour is about to end.
Yep.
I think the number was that she outgrossed both Bruce and Beyonce combined.
Yep.
With her tour. What are the lessons so far from that, and then just the live music economy? I think for all of us trying to buy tickets these days, it blows your mind.
2 lessons for me. 1, Taylor Swift is like no other. I mean, her army of fans spends and is loyal and are diehard. They don't necessarily vote her way, but they do spend and show up at her concerts. And you have seen that in the spending data and the hotel rates data and the restaurants data around the stadiums during times where she's around. I think Europe was a really interesting case of this because Europe has basically no economic growth and is very sluggish. And then they would see these spurts of activity, around Wembley Stadium, around London for the week that she was there, or around Scotland. When
she had GDP impact on countries.
Correct. And not just that, it came at a time where central bankers were trying to figure out, she had monetary policy impact. They were trying to figure out if it was time to start cutting rates, like they could declare victory on inflation. And then they would get this flare up around Taylor Swift for 1 month of inflation. And so at one point, there were questions whether the Bank of England would have to delay cutting interest rates because of all the inflation caused by her time that she spent in London and all the money. So I think, number one, it's Taylor. She's in a world of her own. It's totally unique. But number two, I do think it highlights the fact that we have prioritized spending on experiences and live events and concerts coming out of COVID. We all knew that there would be pent-up demand because we were in lockdown for so long for this, but we didn't know how long it would last. And I think that has lasted longer than anyone expected. We've seen that with the airlines, for instance, in terms of travel and airfare prices going up because the demand was insatiable for traveling, and it didn't last a few months. It's lasted until now. And concerts were a big part of that too. So while Taylor outperformed anybody, it was also there. If you talk to Live Nation and you see their results, it's pretty much across the board. Ticket prices are high because demand is so strong, because people have prioritized this. And they've done it during a time of very high inflation, which means we're not spending as much on home furnishings, and we've all bought our air fryers, and we're not spending on that stuff. But experiences, very hot, very strong. And so Taylor's Eras Tour, among the other many brilliant things she's done, coincided with this burst of enthusiasm for getting out and doing these things after COVID.
Sara, thank you for this speed round around the world and through a number of business topics. And we'll hope to have you back here soon.
Great to talk to you, Mosh. Love your program.